Welcome back. Now, the Nigerian Stock Exchange has invited a total of 86 dealing firms to appear before its disciplinary committee on September 27 and 28 in Lagos. According to a notice issued on Tuesday by the exchange, 70 of the dealing firms are those whose licenses had been revoked by the NSE between 1996 and 2007 and no longer active in the market. A total of 11 other trading firms who have remained inactive for a consecutive period of over 1 year in breach of the stock exchange rule were also summoned to appear on September the 28th. The final batch contains the names of 5 brokerage firms being investigated for unauthorized transactions carried out by them. Now, it's no longer news that Nigeria is in recession. However, what is on the lips of many is how best Nigeria can get out of these present economic challenges. Nigeria was said to have gone into a recession after 3 consecutive negative growth. Recently, global rating agency Moody's warned of a further contraction of Nigeria's economy. The rating agency projects stagnation in real GDP in 2016 and only subdued growth at 2.5% in 2017. Now, many economic experts have continued to profess solutions and the way forward to getting out of the recession. Let's get the views of economists from outside our shores. I'm being joined by the chief economist at Exotics Partners, a research organization based in London, Alan Cameron. Good afternoon, Alan. Good to have you on the program.
Good afternoon.
Now, from your own perspective on the development in Nigeria, how long do you think the country will go through this recession? Moody's is projecting a subdued growth in 2017. What do you think?
I think it depends. If you look at the record historically, what tends to happen is, the recession and cycle of devaluation and rising interest rates, it tends to last anywhere from 4 to 6 quarters. So I personally believe that we're through the worst of it. I think that the second quarter of 2016 will be the trough, and that there's potential for a small rebound in the second half of this year, and then a more meaningful rebound in 2017, depending on first of all the oil price, and second of all the policy environment in Nigeria.
Now, talking about the devaluation, of course, part of the major challenges Nigeria has currently is the increased liquidity pressure in the foreign exchange market. I know you were one of those in support of the flexible exchange rate, and it seems that ever since the introduction of this policy, investors' confidence seem to have been eroded. Why is it so?
Well, I would probably argue with you there. I don't think it's been eroded. It just hasn't bounced back as quickly as some people would have liked or would have imagined. And the problem was that they tried to refix the exchange rate immediately at, 282, 283 levels. And what was advertised was basically a managed float or a free-floating exchange rate. And in the first 2 weeks, it rather looked like a repeg at a lower level. So I think it was just a question of managing those expectations, and that wasn't done properly in the first instance, and I think that made people more cautious. Investors don't have a particularly long memory, neither do economists. I think these things are forgiven pretty quickly. So I don't discount the possibility that things will improve later this year. I think they are improving as we speak, just improving slowly.
Now, talking about improving slowly, one would wonder, why should it be improving slowly? Is it that the policymakers, the authorities are not doing what they are supposed to do?
Well, on paper, everything that one would recommend has been done. And I think, I can't say enough. It's probably been very difficult for the central bank to defend these decisions in front of the president. And the fact that they have lasted this long and haven't been reversed is an achievement in and of itself. But the problem that I think a lot of investors have is that there's been an amazing kind of encroachment of the executive arm of government, including the presidency, into turf that's normally controlled by the central bank since Buhari's become president. And I think that a lot of people are worried that could again become the case if there's discontent over the level of the exchange rate or over the functioning of the market. So I think that's the major risk, and to the extent that people are still holding back, that's what they fear.
Now, how safe is it to invest in Nigeria right now?
I mean, the major risk is convertibility. So at the end of your investment, should you want to repatriate your money to US dollars or another currency, will you be able to do it? And I think people are locked into mentality that's almost too negative, unrealistic. We track a number of different economies across frontier markets, and there's 20 odd economies in that basket. All except 2 or possibly 3 are basically deficit economies, meaning the world supplies them capital in some way, shape, or form. There's no reason why Nigeria has to be a surplus country. It's just people have to believe that investing in Nigeria makes sense. And I think we're slowly getting to that point. So I think that people are presently locked into mentality which is not going to last.
Right, just before I let you go, what's your outlook for Nigeria's economy right now? What do you see and what do you think Nigeria can do to get out of this present economic challenges?
Well, obviously, we've talked about the exchange rate problems. Those are in resolution, if not kind of already the major steps have been done. I think there's still some other kind of easy, well, not easy, but there's overhangs which the government can deal with. Obviously, there's well-publicized problems in the power sector. And the fundamental problem is just a lack of money. The bulk trader is not properly capitalized, and the value chain isn't working properly. And with some sum of money, which I think the government will need to borrow, they can begin to address those problems. Same thing with the fuel subsidy. Obviously, the template rate right now is not all that close to the current market exchange rate, and as a result, we're likely to see a fuel shortage of some kind in the next little while. So those are 2 very obvious things which the government can do. But to answer your question about the economy, here's what I observed, and I think what other economists observe, is that the industrial sector of the economy has been in recession for several quarters, and it's probably through the worst, and that will start to improve. The agricultural sector is holding up reasonably well, and it's not exposed to the global cycle and to financial markets in the same way as other sectors of the economy, so that's kind of expected. The big surprise in the latest growth figures, and this is where I think at the margins the difference will really exist, is in the services sector, and in particular in wholesale and retail trade, which is about 20% of the economy. For the first time in the existence of the statistics that most people look at, that wholesale and retail trade component has gone into negative territory, which tells you a lot about the shape that Nigerian households are in right now. So I think, will we get a turnaround there? And I think that will be the difference between a very kind of modest growth rate and one that's probably more normal for most people who have been looking at Nigeria.
All right, thank you very much for your time, Alan.
Thank you.
Alan Cameron, Chief Economist at Exotics Partners, London. And the International Monetary Fund could lift a suspension on payments aimed at helping Guinea-Bissau emerge from years of political turmoil following an evaluation mission this week. The IMF agreed a program with Guinea-Bissau last year after 2014 elections drew a line under a coup 2 years earlier, one of a succession that have spawned chronic instability and helped make the West African country a haven for South American cocaine traffickers. Disbursements were suspended in June. However, after the government took on 34 billion CFA francs in bad loans from 2 private banks, donors followed suit and suspended budget support for 2016 equal to around 2.1% of GDP. And Qatar Petroleum is interested in the Mozambique gas business of Italian energy group Eni and could opt to join ExxonMobil in buying a multi-billion-dollar stake. State-controlled Eni is looking to reduce a 50% stake in its giant Mozambique gas acreage as part of plans to sell 5 billion euros of assets over the next 2 years. Reports say Exxon had reached a deal that could give it an operating stake in the onshore liquefied natural gas export plant, while leaving Eni in control of the area 4 gas fields feeding it. Qatar Petroleum is in talks with Exxon and Eni on some kind of involvement in Mozambique, which could involve a joint investment with the U.S. major. We'll take a quick break. When we come back, we'll look at other developments in other areas in Africa, particularly in Egypt. Just stay with us.